What's up, everybody? Welcome to the Stocks channel. Today's episode is going to be a special weekend update look at the stock market, and we're going to try to determine if the stock market is ready to go higher or if the stock market is ready for a correction. So there's quite a few things we're going to look at today, so let's just jump right into it. And first up, we're going to take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. All right, so looking at the SPX index, we did see last week close in the red, going down negative 0.72%. And this is a weekly chart, so every single one of these candlesticks does represent one entire week of price action. So if you're looking at last week's price action on the S&P 500, you could see the price action is still closing over that 5 EMA, which is bullish price action. You can still see we have this really strong bullish trend, which is only picking up momentum and continuing to gain traction. We did have a new all-time high formed 2 weeks ago, right around 38.27, and that could still act as a newfound resistance level if we return to that level. However, back in November of 2020, I did generate price targets for the SPX, and I still do have an outstanding price target for the S&P 500 up here at 4,040. So with bullish price action and a bullish trend on the S&P 500, it is still very likely that we're heading towards that price target at 4,040. So the number one things that we want to pay attention to is if we're going to get a price action close on this weekly chart below the 5 EMA. As you can tell from this chart, we've been on a very strong bull trend, and we've been over that 5 EMA the whole entire time. You can see the price action intra-week has wicked below the 5 EMA, but the price action closes have been over the 5 EMA. So closing prices are always going to be stronger and more important when we're looking at a chart and we're trying to determine a trend. So being completely objective looking at this chart, we have to be bullish because the price action and the trend are telling us that the stock market is bullish and it wants to go higher. So the next thing I want to take a look at is investor sentiment survey, and we can see that we have quite a few bears as of the last time this survey was documented. Now there was a software error, as you can read up here, and there was no survey posted for the last week, but you can see that this is probably still very similar to what we would have seen, where we do have a lot of bulls, but we also still have more neutral and bearish position people than we do bullish position people. So like I always say, if there's cash on the sidelines or there's people trying to short this market, that is fuel to the fire, and that means the market can continue to go higher. You'll know you reached a market top when everybody and their mother is in the market and there's no longer any cash on the sidelines because now there's no buyers left. Don't forget that the stock market is a zero-sum game. There's very little profit made in the stock market because for every dollar gained, there's somebody else losing that same dollar. So if you think of the stock market, it's really just a transfer of money from one hand to the other. If you're losing money, somebody else is making money. It's really that simple. So as long as there's cash on the sidelines, this market can and probably will continue to go higher. Now, the one thing to worry about is when this survey starts to show that there's 70% bulls, that means there's only 30% neutral and or bears left. And that's how we'll know when we're very close to a market top. So while there are a lot of bulls right now, there's still plenty of bears and neutrally positioned people as well. So the next thing I want to take a look at is the top 5 weighted companies in the S&P 500. So as you can see here, Apple is weighted 6.41%, and then the next highest weighted company is Microsoft at 5.01%, and then followed up by Amazon at 4.15%, Tesla around 2%, and then Facebook around 1.84%. So I want to take a look at those 5 charts of those 5 companies because those are the top 5 weighted companies driving the S&P 500 right now. So first up, we'll look at Apple, and we can see this is still a weekly chart, so every single candlestick on this chart does represent one entire week's worth of price action. So if we're looking at Apple, this is the strongest weighted company in the S&P 500 index, and we could see Apple did close below the 5 EMA. I do have a support level on Apple right here around this 126 level, and you could see there also is support around 124. So with Apple cooling off ever since it got too far extended and hit that price target at 136, that means there's more room left in Apple ever since it started selling off. So this could mean that Apple is going into a correction and starting to head lower, but there's also a chance that Apple is just cooling off before it continues to head higher. So because Apple is the highest weighted stock in the S&P 500 and we still see the S&P 500 looking bullish, what do you think is going to happen if Apple does a reversal from this cool down period and starts heading higher? So you can see Apple still does have a bullish trend because all of these moving averages are still stacked to the bull side and they're trending in the bullish direction. Obviously, everything is subject to change, but we're taking a look at a snapshot of the market with what we can see and what we already know, and we're going to trade with what's in front of us. So looking at Apple chart, it doesn't look bearish yet, even though the price action is closing below the 5 EMA. It's coming into some very critical support levels, and it still has a bullish trend on the chart. So the next highest weighted company in the S&P 500 index is Microsoft stock. And we see Microsoft stock on a weekly chart also closing below some of these moving averages. We're closing below the 5, 13, and the 20 simple moving average, but we could see that Microsoft has really just been going sideways. It's not really trending upward or downward. It just sort of went to a brand new all-time high around $230, and it's just been consolidating with lower highs and higher lows. So in a consolidation, it typically means the stock could break to the upside or the downside, and you really don't want to guess. You just want to watch it and wait till it shows you which direction it's going to break. So Microsoft is likely to form a new lower low or a new higher high in the very near future. Now, if you're paying attention and watching Microsoft and you see it start trending upward to break out to new all-time highs, that's likely going to start pushing the S&P 500 much higher as well. So you can see Apple was cooling off, and you can see that Microsoft is also cooling off, and we still see the S&P 500 to continue to trend higher. So if these stocks do wake up and they do start trending higher in the very near future, that could easily send the S&P 500 to that price target I have at 4,040. So next up, let's take a look at Amazon stock, and we see Amazon doing something very similar as Microsoft, forming lower highs and higher lows, which means it's also stuck in a consolidation period. We can also see Amazon is sitting right on top of a support level, and it does look like it's trying to form a lower low if it does break and close below that support. However, if Amazon starts bouncing from here and starts showing some bullish trending, there could be new all-time highs on the horizon for Amazon stock, which would be bullish for the S&P 500. So you can see there's not a whole lot of bullish or bearish trending on Amazon stock right now. It's also just consolidating and going sideways, and it's getting ready to break to the upside or the downside in the very near future. So next up, let's look at Tesla stock, and we see Tesla went way too far, way too fast. And in the first week of January, Tesla broke way outside the upper Bollinger Band, ran up all the way to $880, and now it's paying for that move because it moved too far too fast and it has to cool off. So we saw last week really just a cool off period for Tesla, and we could still see more cooling off while Tesla waits for its moving averages to catch up to its price action. So we see Tesla went way up above the 5 EMA, and now it's cooling off, and it's trying to let that 5 EMA catch up to the price so it can continue to head higher. I do have upside price targets on Tesla at $900, and Tesla could still head much higher from these levels. Now, the one thing to note about Tesla is it is showing much more bullish trending than we saw on Apple, Microsoft, and Amazon, where those stocks are either cooling off or consolidating. And I also have Tesla finishing a fifth wave in the very near future, which means a short-term bear market could be coming in the near future. However, I'm not in the business of calling market tops, and Tesla could continue to head higher and break through these price targets and form new all-time highs week after week, which means wave 5 could extend and we could have a lot more bullish upside in Tesla before the correction. So it does look like Tesla is somewhat more of a market mover than some of these other blue chip tech stocks that were used to leading the market like Apple, Microsoft, and Amazon. While those stocks are cooling off and consolidating, Tesla is on a bullish run and sending the market higher and higher. As you probably already know, Tesla is now also in the S&P 500, and its market cap continues to grow as it continues to take more and more market share from the S&P 500 index. So I do think that Tesla is a very important market moving stock right now, and if it does start to cool off and look like it's going to trend in a bearish direction, that could signal a stock market correction very easily. But right now, it's very clear that Tesla is in a very strong bullish trend, and because we're not calling a market top, we're just going to assume that this bullish trend is going to continue until we see some reason to believe otherwise. Again, we're being objective and we're following the price action in the trend, and it's very hard to look at this chart and think any bearish thoughts because it's just continuing to head higher. And then finally, the fifth weighted stock in the S&P 500 is Facebook stock, and we see Facebook also looking relatively bearish or neutral, just consolidating and going sideways. We still see lower highs and higher lows, and it looks like Facebook is finding support at the 50 EMA on the weekly chart. So out of all of the 5 stocks we looked at, the only stock that's really trending in the bullish direction is Tesla stock. Apple, Microsoft, Amazon, and Facebook are really just going nowhere ever since they hit their all-time highs. They're consolidating and they're moving sideways, and they're getting ready for a big move either in the upside or the downside. So that should show scenarios for bullish or bearish scenarios either way. If all of these big heavy-weighted stocks start breaking to the downside, it's going to bring the whole S&P 500 down with it. However, we're being objective and we're following price action and trend. So if we go back to the S&P 500, if we're looking at objective technical analysis, this is a bullish chart. Therefore, you can make an assumption that Apple, Microsoft, Amazon, and Facebook, while they are consolidating and cooling off, they could be getting ready to make big moves in the upward direction as soon as this earnings season's coming up. So we're not guessing what's going to happen. We're using the S&P 500 to show us the direction of the trend. So there's obviously plenty of other stocks in the S&P 500 that are doing well, and it's not just the big tech giants that are driving the S&P 500 higher. If that were true, we would see Apple, Microsoft, Amazon, and Facebook at new all-time highs, and we don't see that. So this is actually a very healthy market because we still have a lot of big tech blue chip stocks that have a lot more upside to go if they start trending to the bullish direction. So for that reason, I am still bullish on the S&P 500 and my price target is still going to remain up here at 4,040. While we don't have to get there as early as next week, we are definitely trending towards that price target. And while there will be volatility on the way there, it's something you should be aware of because if the market's trending higher, you don't want to be shorting the market and you may not even want to be on the sidelines. I always advise having a cash position, especially if you're a trader, because if the market does start going against you, you can always trade and buy stocks if you have cash. If you're 100% in this market, you're getting too bullish and too euphoric at these new all-time highs, you really should consider taking some profits and positioning yourself for any market conditions. So really, to summarize this market, I am still bullish on this market and I do think there's plenty more upside to go. The nerves are definitely increasing with the retail investors the higher the market goes, and there's still plenty of hype stocks and FOMO stocks that people are chasing, which will eventually lead to a large stock market correction when the time finally comes. But I'm not in the business of calling a top, and I don't see any evidence in the price action or the trend that tells us that we have topped out and we're gonna go through this big correction anytime soon. It could be right around the corner, or it could be 2 to 3 months away. I don't really care to guess, or I don't care to try to call the top at the perfect time, but we will see it in the price action and the trend when the time comes. So we're just going to stay strictly objective right here on the stocks channel. And right now the picture is still bullish until we see something shift in this market. So I hope you enjoyed this special weekend update. If you do, please smash that like button and let me know in the comments section below. And if you are looking for a trading community, consider checking out the stocks channel Discord, which you can find out how to join in the description of this video by clicking on the link. We trade a lot of hot stocks on the stocks channel Discord and we're absolutely crushing this market right now. So that'll be it. I hope you're all enjoying your long weekend. And as always, I will see you in the next episode.